One sec, everyone. We're gonna get started here in a second. Give me a sec, guys. I'm just gonna bring up the chat so I can see everyone's questions if y'all have them. Also post a link in Discord so it's there. But yeah, give me one sec. Throwing it off topic. There. Anyways, wanted to throw that in there. Pretty interesting day with what we have going on. And if you have questions, I prefer YouTube chat, just easier for me to go through. One sec. I want to see if it's going to show this real quick. DX. Okay. So a lot of the stuff we have going on today, primarily that I'll be looking at is with ES. Obviously, we have quite a bit happening with what's happening with Kashkari. We have the 200 SMA we've been talking about pretty extensively with the market. And ultimately, when we come back down to where we've been trading, the ultimate goal, from the last video we did last week, and then ultimately to this video, was coming back down to this 200 MA. If you remember, I think last time we did the video was on the 22nd, so 24th. You touched the 200 SMA, bounced there again. But what I've been watching for on Bookmap, and I mentioned it in almost every video, is kind of the strength in which how we're moving here, right? And again, you can see so. If you'll notice a very common theme, the path of least resistance continues to be the downside, which indicates, in my opinion, that the trend is still very much bearish. Now, I think one helpful tool has always been the CVD, and I'll probably go a little bit more in depth with that today. I don't like using the CVD and some of the bottom tools with the equities because I think it could be a little bit misconstrued. But something like really interesting is like looking at NVIDIA today. And every target that we've had on NVIDIA, it's really like if you've been following the chart whatsoever, the only one that like is a little bit off is maybe that bounce you had here around 930 when you bounced into around 228.5. I really think you wanted to test like 229, 230, but there was just no buyers out there on the market. But you can see that we essentially were just pushing down just with ease to the major levels. 225 came in double bottom there, bounced up a little bit. But you can see, even though there's really no upside resistance, there's sellers not even making walls. NVIDIA is so weak, right? And this is what I love to see here is ultimately we want to see a break of that 225. And most likely if we get that, we're going to get the flush down to around 221, give or take, is where I'll be my next target. And you can actually see at 220, we're going to have that big block there. We had a decent buyer set in right here around 222.5, but took that off. So again, I think this is just overall, you're seeing buyers come to the realization that there's a lot of weakness coming in here right now. But yeah. One sec, Bruce wants me to try this real quick. New York's. It's the...
Yeah, give this a shot here with the, so not CME, but NYMEX. Yeah.
And the only thing though, is, yeah, it's only when I switch over to the NY, and it was when I reset it, because you messaged me, I believe on, I think it was Friday when we went over those messages. Subscribe. Oh, there it goes. CLJ3. That worked.
There you go. Excellent.
I might just need you to send me over like a link with all the tabs I need to look at.
Sure. No problem.
Just so I have them, so I can go down my little spreadsheet when people have questions. But yeah,
okay.
Which one is this? CLJ?
Yeah. Yeah, that's the current month.
Okay, what is this for though? What is this ticker for?
That's the crude oil.
Okay, awesome. Oh, I should have known by the price. Cool.
Yeah, and let's see, that's for the April contract. Yeah, it's still valid for a while, it looks like.
Awesome. Sweet. Thanks, Bruce. Let me actually I'll make sure that audio was on. Cool. Trying to see if there's any questions as well coming in. If you're in Bookmap, talking on there. I recommend just using I'll show you where right here real quick. If you're in Bookmap's Discord, just use the open chat and I'll respond throughout there. Also too, I did not do it this week. I just been so swamped. But again, if you're in Bookmap and you're not in, Option Drops Discord, I will be posting more inside the channel. I have not started that yet, so don't think that you've missed out anything. But a lot more will be coming in here as well. I just don't want to link anything like specifically to my page or anything or like that. But I wanted to have just more information based coming out there with what we're looking at on Bookmap. But yeah, so we'll get back into this. Let me bring the questions back up. But yeah, so if you guys have any questions or things you want me to cover, please comment down below. A lot of the equities that I'm looking at specifically right now for downside, and I've been heavily talking about on my channel, Amazon, Nvidia, those are my big ones. Look at Amazon, just absolutely gorgeous. Amazon, we had a little bit of, and it was funny, people were kind of talking about Amazon, finding strength, giving you a visual of the chart real quick. I think looking at the chart, then coming back into Bookmap, it just gives you such a better visual. And you can see if we go to the 2 hour here on Amazon, look at that action that you were getting. You were making those higher lows. People are like, oh, well, maybe Amazon's finding support. And you can see you break below around 93.5. As you come back into this chart here on Amazon, you can actually see that this morning, you start to see a few of those walls come in and boom, just breaking right through them. And on top of that too, it's just nonstop momentum to that downside as well. Absolutely gorgeous to the downside push you had there. You can just see that's all that is market orders. That's just aggressive selling across the board, right? And you see them set up another wall, breaking through. And this is exactly what you want to see when you're short on something, is just basically buyers not even able to hold you up. Now you found a pretty big level. We saw from this morning that this was the biggest level. And again, Bookmap is really one of the only ways you're going to get a better visual of the level 2 and what's happening with time and sales. Because if you're looking at level 2 data on something like, for instance, TOS or like the order book or interactive brokers, you have to scroll through, right? You're scrolling through all the numbers and looking. But when you have like the actual heat map, it gives you a better representation of that's where you get the balance. Now you took a lot of the liquidity out there, and honestly, you can see what's happening here now is they're actually just dropping more of that liquidity off the bid there. So you can actually see that it's getting smaller as we progressed here. So it's highly likely you hit 92 again, you're going to break right through it. And again, if you've been watching at all, what do we have going on here? We have that daily gap down here at 90.25. We've been calling for that all the way since 96. This has definitely been a swing trade to say the least. You have another giant daily gap down at 86.5. So we definitely want to see how we start mapping out to when we start getting those levels. And you can see where's your next biggest order. Actually, the biggest order on the book right now is down there at 91 near that gap fill. Definitely making me feel a little bit better right there about my target. And then where's your biggest one? It's literally 6 times the size of 91, where your biggest order, the closest order is right there at 90 bucks, which confirms that most likely we're going to get a little bit of love and some buyers are going to be reacting down there. But still like another $2 of downside. So absolutely love that. I don't know why the chat chain's coming up like that. Okay, one sec. Bring Discord back up so I can see. Go back to chat. What's going on, Mr. Braun? Sorry, I just missed your message there. I also am interested in crude. Crude's been something that I've been watching. So if you are new to watching me at all, basically what I do on my channel is going over heavily with what's happening with futures, because in my opinion, futures tell you everything you need to know about equities, right? So if you're just trading futures as far as commodities like oil, gold, silver, the NASDAQ, S&P 500, then obviously it's a little bit of a different world. But if you're trading equities, like I just said, Nvidia, Amazon, Tesla, big names that I've been looking at, right? I follow those charts heavily, and I use Bookmap on these. But where my primary, I would say, if I had to use 100% of my time, about 80% of my time goes to looking at ES futures and the NASDAQ. That's where all my time goes. Is that something, Bruce?
Yeah. I know
if you had a question. Sorry.
No. I mean that's kind of what the main reference here, and then your individual stocks they play off of each other.
Exactly. So, yeah. So honestly, so if we're looking at something like, again, and I want to constantly be going back to what we talked about in the last webinar. That's definitely something you're gonna see as a common theme. So we can see like if this is actually working. A big thing that I always tell people is question everything that you hear on the internet. You should never believe anything you hear for the first time. Generally, people try to make things sound too good to be true. So what I like to do is go back to previous, webinars or what we talked about previously. And so last Wednesday, as you can see here, we'll go to the daily chart so you can get better visual maybe here. So last Wednesday was right here, the 22nd. We were about 12.1. We got kind of close. We bounced up. We hit that supply level and came back down. So we can see that everything's kind of playing out like we wanted it to. And so when I'm looking here, and now we're at that next really big level. And so this is where you really want to hone in my opinion, on something like Bookmap and looking at that data, because you can see like we're finding support. You can see the bounces. Obviously, like there's a lot of price action happening here. There's a lot of stuff happening. We're making lower highs. So Bookmap is going to be the best source of getting that information. And so I believe where that 200 SMA is at is going to be, actually it's going to tell me right here. Should tell me right there. What's the number? 39.48. So we're actually going to be able to see that as well. Get array. Yeah, I should put that right there so we can see that. But you're going to be able to see. So that's going to be the major level we need to watch. But another thing that I was talking about on the live stream a second ago on my channel was it's really interesting to see something here and I made it a little bit more with the colors so you can only see like where the bigger levels are. You can see that on the upside pushes, like I said, was saying in the last stream, is definitely the upside has more resistance than any type of downside drop that we've had, and like just giving you, food for thought of like, look how long it takes you to get back up. So we go from, lows of, 39, 50 back up to 39.70, 20 points. It takes us quite a bit of time there. And then, the drop took us, 5 minutes, give or take, not even, right? And then happens once again, there's not even any love or any bounce happening here. And you can see that buyers try to put a wall up here and they were just like, screw it. Just let them make it a lower low. And then you see resistance coming back on the way up. And so what you're looking at here is, even when we're trending up here or where we're at now, there's not a lot of walls down here. Right, very minimal. You're seeing a little bit of a wall come here at 39.50. That's a pretty major level, but you're not seeing that much support, that much effort by buyers to show up here. So that inherently continues to make me more and more bearish as I look at the market. And then that's not even lining up with fundamentals, right? So we can go into fundamentals, and that's a whole nother tangent we have to start attacking. Is when we look at fundamentals of what the Fed is saying and how that's affecting us, and it just continues to point towards the downside for me. NASDAQ, you're getting a little bit, yeah, NASDAQ is pretty brutal. NASDAQ is the one that I've been watching. You kind of see it trying to make a little bit of an ugly head and shoulders on the smaller time frames there, but this thing is just brutal. Just really look at what's happening here too. So you can see as we come in here, you're just making lower highs here. Just on the day, since the trading started around 8:30, you can see lower high, lower high, lower high. And guess what? You're making lower lows on top of this, right? So again, this just inherently has to make you side with the weakness. If anything, this is telling me that if I'm trying to take any trades, that the upside is the least optimal thing for me to take based on, scalping in the price action here. Because every time we're getting any move or momentum, it's heavily in favor to the downside, right? And another thing that you should be watching is the speed in which you're getting these, like I was saying on ES, is any of these drops that you're getting very quick, right? Very, very quick and just aggressive to say the least. One sec. Mute. Sorry, if you're in Discord and you have any questions and I'm not responding to them, I had to mute a few people for myself. But yeah, so also coming in here, and one thing you're not gonna be able to get is actually, sorry. Yeah, so when you don't get the icebergs, which is something that is sad when it comes to NVIDIA and stuff. That's the only thing that I wish, but I know that Bookmap, we're just not able to have that yet. I would love to have icebergs, Bruce. If one day you'll add that to Equities, honestly, I'll lose my mind.
Oh yeah, we want that, but
dude, I would lose my mind.
It's not possible at this time.
Honestly, in the Discord lives, when I first started using the icebergs, man, people got tired of hearing me say the word iceberg because I was using it so much. But literally the best. Gold, Bruce, can you type me the gold ticker?
Yeah, sure. So I think the current month is hold on a minute. Let me take a look here.
Is that on the NYMX?
So actually go up to help, close this and go up to the help button and then click on symbols guide there. Yeah,
Oh,
symbols.
classic.
And then that'll bring up a good guide. I actually have a video that I'll be able to release here pretty soon on how to look things up. But then that covers like a majority of the popular symbols. Yeah, Comex, and then input here
GC. I think it's
G- GC, and I think it's
J3.
I'm not sure. Hold on.
I
Yeah,
think.
J3.
I think.
J3. Yeah.
Yes. There it goes. Look at that. It's fixed. Tell them about the ICs. Gold. Gold is interesting. So I have a lot of questions asked specifically in my videos about gold, especially because I go over so much of futures. And I think when you look at gold, I think you have to look at it differently. So I don't know if you're a day trader or you're like swinging gold positions or how you're attacking that. One of my biggest trades ever was gold. And it was partially because I forgot that it was open, but I went long on it and I literally just forgot that I had it open. I came back 3 days later and gold had gone on a run. I think it was back in 2018, give or take, maybe 19. Anyways, it was one of the more beautiful plays that I've ever had. But gold, if you're looking at it from the point of view of where we're at. So here, I need to get a little bit more. Waiting to see. Trying to see if it's going to load. It usually takes a second. Let it load for a second, I'll answer and go over it. I need to get more information here before I start going on about this. It's not loading it up though.
Yeah, that it's not accessible right now. It's saying local data, not cloud data, so it's not able to
Okay. Yeah.
download
So
from
it's,
the cloud.
so it's only going to show, okay, what I have. So with gold, obviously you're not going to get as much movement and, you know, the key levels as far as like ES. So like if I go back to like ES, I think like it's, you know, far easier to get that movement and get the expected movement, right? So we can go back here. You can just see like, you know, a lot more volatility happening there. So gold, I definitely think you have to be able to take a step back. And I definitely think when you're trading gold, you need to identify the trend. So what I would do when I'm looking at this is I would go over, I think it's XAU, not silver. No, XAU is gold. So what I would do is map out where you're moving. And so looking at the structure here on gold, like obviously it's been really nice. Even like on something like the 4 hour. So like on the 4 hour, you've been moving fantastic since basically November, right? So looking at the structure here on gold, like obviously it's been really nice. Even like on the 4 hour. So like on the 4 hour, you've been moving fantastic since basically November. The structure on gold, obviously. Okay. Got the mute. Anyways, okay, so you've been getting that great movie. You mounted the 200 SMA back here December. You've been pushing up since. You're getting a little bit of a retrace, bouncing up to. You can also see coming back here, you're getting that, you know, previous, you know, swing highs here. You kind of have this new triangle, broke above, mounted, pushed below, remounted, pushing up. Looks really good. Okay, so in my opinion, you're back to being bullish as long as you're above like 1821 and then ultimately above the 200 SMA. So right now I'd be looking out for the upside type of trade and the upside type of trend. Getting a little bit more information, you're getting that VWAP, holding it very closely. So again, this confirms, in my opinion, that if I'm looking to trade this, I want to trade the upside. So then what I'd be doing is going over to something like Bookmap and identifying this. Now, when I'm looking at this, I would prefer to grab any type of commodity or futures, anything at large supports, right? Because when you're, and it's just different than options, is because you have to be able to ride them, in my opinion, right? So you want to have, you want to reduce, I say it all the time, reducing my risk is number one priority at all times. So as you can grab closer to any sort of demand, any sort of, you know, key level, obviously you're going to reduce the risk across the board. And so when we look at this, yeah, you're getting the move up, and but your targets here, you need to zoom out way more, in my opinion. We have to come out way further. So obviously 1850, but I need more data here. That's all I need. Yeah.
I'll get that for you next time.
No, you're fine. You're fine. One sec. Just zoom out just a little bit. I want to see this. So 1847. I think that's it. I believe that's it. I'm pretty positive. Oh no. Jeez. Anyways, we'll use this one right here, right about there. I'll get rid of those in a sec. So 1845 all the way basically up to 1846. And what I'm looking at is that previous level that I was watching back here of where you previously had some of that action happening. And so this is the part of when you're looking at commodities, I think you got to be a little bit, more careful about when you're looking at these, is you want to be able to look back at where previous buyers and sellers were. And you're going to hear me say this all the time. Let me draw a few right there. I don't know why it's not. There it goes, right there. Perfect. So 1845.6. And so when you see that, that's where you're finding the resistance. And you can see again what's happening. Get rid of that. I hate that I have to keep clicking that. But as you can see what's happening there, I'll leave that one there for now. You can see that's where you're finding resistance. You find it here, you're finding it there.
Right.
So what I'd be looking here once, I'm going to go through and mute everyone real quick for myself. Okay, so what you'd be looking for is to get back above 1845 and then possibly getting that push into the next major level, which as I'm looking here, since I don't have the information, it's towards 1850. So if you're looking at even scale out, you could do 1847. That's about it. So I'd scale it probably half and then try to ride it up towards 1850. But until you can get above that, you can see you're even getting more, seller stepping in at that point as well. It may not be reflecting on the book of seeing large selling positions established there, but still, it's still there. But yeah, you got to have more information. And that's one reason why I don't love using NQ, is because you're not going to get as many, as you can see, there's no major wall set up here. You go over something like ES, major walls across the board, major. You're going to see it over and over. And again, you're seeing that weakness step right back in. But on the bright side, you are seeing some buyers trying to establish there. But again, these smaller walls here, I'm not too concerned about, right? So you can go back and look at some of the more major walls, like something, down here, a lot more lots were sized up down here to when you came down to 39.50, but overall, as you can see, you just took this one out right here as well. I mean, you just took out this major level. So again, like I said, all the strength, this buyer right here, look, he took his order off the bid. He's like not interested anymore, just taking that off right there, gonna move it down a little bit. So again, like I said, all the weakness, in my opinion, is just easily to the downside. The sellers have no momentum at this time. Going over to Bookmap real quick. Trying to see if there's any questions on equities specifically. That's definitely where I prefer. But yeah, looking at what's happening here on NVIDIA, trying to get a little bit of support there as well. Again, NVIDIA, what I'll be looking at today is if you get any more breakdown, is can we get below 225.5, 225. Amazon still showing weakness. Just mentioned him a second ago. You can see buyers are trying to hold you above 92. I think if you get below 92, it's going to be pretty tragic here for Amazon. I kind of want to bring up Tesla as well. Tesla is one of the ones you're always going to get a lot of action on as well. Move that one over here so I can see it. Crude oil looks disgusting. 77, easily pushing up. Another big thing that we're seeing here too, if you're looking at crude, and you have to follow, in my opinion, if you don't follow the data and the fundamentals, I think you're gonna get torched with understanding where you're moving at. But looking at what's happening with crude specifically, it's moving because of fundamentals and what's being said about China, and you're easily just pushing up to the upside. But again, you're not having tons of major levels. But also you can see back here, you had a seller established here. He took it off, just moved it. And so you're kind of seeing like it almost like you're trading like in a Bollinger Band, but you're going to see these levels just keep moving up. So what you're more interested in is definitely those major significant levels that were established. But once you start seeing buyers take those off, I'm like, and it's not too too promising of getting rejected if we come back up to that point. But what I will say is looking at US crude, so you can actually see here also going to something like the daily, you can see they're definitely trading in a pennant / channel, if you will. You can actually see right here that you're trading in this level, basically getting rejected at like 80 to 82.5. And on the downside, you've been basically in this range down here of getting any type of balance between 71 and like 73.5. come down a little bit more down there. And this is where you've just been ping ponging back and forth. So honestly, if you're using this, definitely what you want to be using is just following what's happening here. And I can guarantee as you get closer towards 80, 81, you're going to start seeing those orders stack up. But when you're looking at something like this, it's very similar to NQ, is a lot of those orders are going to stay very close to where we're at, close to the bid and ask. They're not going to get and set major walls at 80, 81 because unlikely that oil is going to move $4 instantly, right? You're not going to get that type of action. Whereas S&P and Q futures, definitely going to get more volatility, quicker action happening there. Anything else? I mean, nope, no questions there. But yeah. And definitely this time right now is on equities is when we start to see a lot of the slowdown happening during lunch. Definitely going into 130s where most of that action picks up. But you're seeing you're coming down to all these major levels. 92 should get retested here in a sec. If you make a higher low here, that's not terrible. For buyers, that could be a positive sign if you actually can hold this 92.2. Going into Tesla, look at Tesla, major level. And a lot of the time too, if you're not the greatest at finding key levels or finding where the support is or finding anything along those lines, you can come in here and it'll actually, these levels will repeat themselves 9 out of 10 times. So if we come into Tesla, you can see like even starting at the beginning of the day, the 202 level. I mean, I can zoom out a little bit more here. Since 9:30, you can see the 202 level, massive, seller was set up here. It's got stronger and stronger and stronger as you got closer to it, which signifies that someone was trying to hold you down. You broke through it, broke back down, pushed back up. You can see you try to mount, and then ultimately, where did that wall come right back at? The same level, 202. Once again, you flip back below it, and then guess what? The same seller's setting right back up at that 202 level. So again, you're going to be able to identify where these come in. And then also too, you're going to notice patterns that happen with something like Tesla or some of these bigger names like Tesla. You're going to notice you're going to see a decent sized wall at every dollar. But you are going to notice that some levels are much bigger than others. Like the 198 level, major key level here. Like going into the chart here, and this really just gives you confirmation when you're looking at it. And it's something that I do often. And so we come into Tesla and just look at where you're bouncing. If we go to something like the 2-hour time frame, right? Just giving you as much of a visual as possible. Let's mark it at 198, about right. Let's just mark it about this level and let's give you a little bit of a box so you can see it a little bit more clearly. We're going to go to the price range and you're actually going to be able to see that this range. I like to do blocks so you can see sometimes you'll get a little bit of a wick. But you're going to notice you found massive support off this 198 on repeat. Just over and over and over. We've seen a lot of bounces, break and retest. And you had it this morning, right? You had it this morning. 2 touches, made actually a higher low and bounced up. And you have the Tesla investor meeting tonight. So going back into what's happening here is, 198, it's definitely the level you got to watch if you're expecting or wanting more downside, which obviously I do because I'm short in it. But you want to see more. BR, I don't know what BR is. Ubira. But yeah, so that's what we want to see. We want to see more downside here, but I'm very doubtful that we get a flip on 198 before the investor meeting. That'd be absolutely shocking if that was to take place. Very low possibility. Even if ES drops below the 200 SMA, I don't think it happens. You're seeing some buyers try to set up positions there as well. Crude oil is trying to push up, not getting nothing. But yeah.
Yeah, it's a weird correlation with crude.
Like the reaction of crude going up while ES is going down?
Yeah. I mean, I haven't looked into it recently. I know that they were trending together a few weeks ago, but now they're kind of decoupled.
So, in my opinion, it takes place with everything that's happening with China right now. And this is we're seeing like you said, the decoupling of it, of kind of separating, right? Because of what's happening with China and the petrodollar. So if we look at what's happening in the news and what happened with the nuclear deal, and a lot of people, we don't talk about the nuclear deal anymore because it didn't go our way for America. So we just swept it under the rug. If you look at I'll go over Meta one sec, Quad. If we look at what's happening, for instance, last night, China's GDP came out and it was expected to be at 4%. It came out at 5% because China is in the process of doing basically mass expansion and reopening their economy. Their mask mandate was, I think, 985 days. It's officially over now. And so you're seeing a giant resurgence in the use of oil, energy, and infrastructure in China. And this is directly affecting our inflation numbers as well, because we're seeing their market go up and go crazy, and we're seeing the American market kind of struggle right now, and it's going to cause more issues for us. But a lot of the nuclear deal now have heavily affected Russia and China, because Russia is the one that negotiated most of that. And so when you look at what happened, one of the contingencies with China purchasing energy out of from the Saudis, if you look at what's happening there, they want, and it was contingent that it would be done through the Chinese yuan and not through the US dollar like it was previously and has been done for the past few years. And that's why, petrodollar kind of stems from there. But that's why we've been seeing a lot of weakness in what's happening here. And you can actually see the direct correlation with the dollar. And since that happened, you can go all the way back to November and December, and you can see that that's when the dollar peaked, is right around that time. I need to go to the daily so you can get a better visual. You can see November is when that starts to happen, when the nuclear deal gets kind of finalized and everything gets put in writing. And then you can see that's when that's when China started devaluing the dollar. Japan had to, unfortunately, for their economy. And then you can see it just gets absolutely hammered. And then you start to baseline down here in February and January, but getting a nice little bounce. But still, that's kind of the concerns with anything happening with oil. But we just got a giant, basically, target raise on oil and energy from a lot of prominent speakers today. But yeah, so and this is also not super surprising. So giving you a visual, this is the U.S. Go over crude and kind of how you've been trading there again. But one thing I will love to give people a visual of is going over the SPY just in comparison, right? And people that are wondering about inflation numbers or anything happening there with, understanding the trend, just look at crude went crazy right here during December, November of 2021, started going just bananas to the upside. And this is the SPY that completely was trading opposite to it. So now that, we're kind of having this resurgence of energy, I don't think it's surprising that oil can start to push back up again and the SPY will go down, because if energy starts to have a resurgence, I think we're definitely going to see the S&P get hurt. I think we're going to see a lot of pain if that starts to happen. Meta, I'll go over Meta real quick. I have to bring it up, so you're going to have to give me a few. 1 sec.
Yeah, I gave you access to backfill data for CME group futures, but you won't get it until you restart.
Okay.
So,
no
and
problem.
don't do that now.
No problem.
Okay.
Jose Einhorn says the Fed wants the stock market to go down. I think it's a lot of people being biased, in my opinion. There's all people see is rate hikes, and they're like, oh, so that they want to do rate hikes and they're trying to get the economy to crash. I'm like, I mean, do they want to? They just gave you a reason why they have to do rate hikes. But same thing here on Meta. Very, very good call out here. So if we're looking at Meta, you had your basically going back to let's grab 6 hours. 1 sec, it'll go a sec. I just want to show you from the beginning of the day. Personally, with Meta, I don't want to touch it at all right now. I'm petrified of it. If there's any name that I don't want to short, it's Meta, because you continuously get news about banning TikTok, and any news about banning TikTok is really good for Facebook. You can actually just go pull up any news source, type in Google ban TikTok, look at the dates, those were all published, and then just look at the Facebook chart, and you're going to see that Facebook continuously goes up every time those articles come out. But we can see here as you start to break up to the upside, obviously, 8:30 to 9 o'clock, you start pushing up. And this was all on news of Biden now having the ability to ban TikTok now. It was breaking news this morning. So you push up. From there, you can see a clear support level at that 76.10 range, give or take. And then from there, once you break that, it's over, like we just said. So I'm going to go back to ES to just give you another visual of kind of like how this is happening out here. But you take that level out, and then once you can see from there, there's no more support. And usually what happens is you take it out and you get a little bit of a bounce. But Meta's case, it was even more bearish than we could have imagined. You stayed sideways and then dropped down another dollar in about, how much of a time frame is that? About 15 minutes, 15, 20 minutes, you've dropped another dollar, give or take, right? Coming back down into 175. Going into ES, very similar to what we just saw, right? I already knew what we were walking ourselves into here. You come to that level, you didn't get a bounce, you drop through, get a little bit of a bounce there, and now you're pressing back down. And again, where are we finding support at? We're finding it near 39.55. But again, what we want to see is a break of around this pretty big level that we had back here. And you can actually raise that just a little bit towards 39.50. But again, where is that going to come right in line with? It's going to come right in line with our chart of what we're looking at. There's no, secret sauce. It's just all coming right back down into the work that we're already putting in, which is right around that 200 SMA, about 39.48.5. So you can see that this definitely just helps you confirm to understand, are these levels important? Are these levels key? And I see a lot of people say, oh, well, there's a massive level at 12,050. And I'm just like, well, why do you think that, right? And usually someone, when you ask them why, they generally don't have an answer. That's why I always say ask questions, ask as many questions as possible. But you can see that you're just basically pushing up, and there's no real rhyme or reason about where these levels are, right? Because you're just making lower highs across the board. Same thing with NQ, as we can see here, right? So just continuously, and for once, anytime you see any type of level get established on NQ, 11,925, that is shocking to me. I never expect to see massive walls on NQ. So those always play a role of significance. But where is this at? It's not, a tease. It's not nothing, a big surprise. It's right at previous swing lows, exactly where we were. So 100% as we come down into 11.93, if we do, right, I'm going to be watching that level. And what do we want to see? Hopefully, we want to start seeing if we're going to, start making that breakdown, right? We want to see that retest of the downside, right? That's all we really care to see, right? It's all we want to see. Can we get a retest and start pushing back down? That's what we want to see of that massive level that we have there. The same thing for ES. We want to see a push down. Yes, awesome. Can we see a push down? But ultimately, where you get all your confirmation when it comes to these charts is how do you react at that level, right? A lot of my trading, a lot of when I met Bruce, met Josh, it was all about reaction type trading. And that's why, ultimately I use Bookmap so much, but that's going to be the big level there. Good question. How important India is. I don't follow any of the India markets personally. And even when I was trading futures, I didn't, but that was only because my broker didn't give me the best commissions when trading specific futures. But yeah, so and again, India, when you look from a fundamental standpoint, they're benefiting a lot of what's happening with China and Russia, specifically with the energy output and the deals that are being established with them. So I would say that India and the American markets have little correlation right now. Now the Indian market, obviously, it's huge, giant population. But I'm just saying, together, are they going to follow each other? Unlikely. They're kind of disconnected, in my opinion. Last night, I think we saw the Chinese market just go absolutely crazy. Just went nuts last night. Nvidia flatlining at 127. Amazon, look at that, hit our level down here once again. You're getting a bounce. You can also see that from that level, you started seeing that level reduce. The number of orders there, it was getting smaller. And then as you got closer to it, they started adding more. You did not even come into it yet. So definitely interested to see what happens if we come back down. Tesla, where you at? Yeah, Tesla. I think there's no way in the world that this comes down to 198 again, or at least breaks it. Don't think that's going to happen today. You're seeing sellers set up a wall there again. There we go. That's what you wanted to see. I really hope we can get a little bit of a breakdown during this live stream. Even on last live stream, we had, what happened with some of the data that was released. But yeah, I think we had, what was that, PCE data? CPI, one of them, PPI.
Yeah.
But yeah, so this is what we're looking for now. And it's funny going over this. I'm just like, it's not the most fun job in the world sometimes. It's pretty slow sometimes. Meta coming down to 175. Got a little bit of a bounce off that level. Didn't even get to hit it. Jordan did see more buyers coming right above it actually too. But again, not the most strength there. Is there any correlation between Indian markets and the US markets? Anshul, I just answered that. I don't believe so personally. That's just me because fundamentally so many different things are moving each other. Especially, with, who a lot of their ties are with their markets. But again, my focus is not the Indian markets, so I could, be a little bit off with that statement. Mr. Braun asking again. Key levels and watching the bid size at a certain level got you. Yeah.
Yeah, it's interesting, Tyler. Like you're looking at earlier this morning. Like we've been working with a dome trader. He only trades off the dome, and he's been doing that for years. He's an expert, and he was talking about the advantages of a dome and how understanding the here and the now and the liquidity. How much of an effect it's all about the liquidity and how that affects his decisions. And you're doing the same thing here by just looking at higher time frames, the larger levels of liquidity, and then understanding the context of the price action and the aggressor volume around those areas.
Yeah, for sure. And it's just like, again, the biggest thing with me, and I think one of the biggest problems with traders in general is understanding winning and losing. I think everyone thinks we understand it. At least we like to think that we understand it. But my whole process when it comes to trading is understanding that I'm going to lose, right? That's the number one thing with me and being able to control those losses. And so, again, I'm like a broken record. I repeat essentially all the basis of how I trade and why I trade. I'll repeat them over and over and over. And you're constantly going to hear me say, I want to reduce risk and maximize reward, right? And so when I'm looking at that, I always want to trade with the trend. And so there's a very common theme if you watch any of my stuff on YouTube, the daily updates is I'm wanting to trade the trend, right? So if I'm looking at this, right, I only want to trade ES on the downside for myself, right? This is actually one of the more struggles that we've had to the downside. But besides this, we've already seen two cases today to where we had very aggressive selling, right? Very, very aggressive in comparison to the buying that we had back, right? I think we can agree that the selling was a lot more aggressive than the buying, and the buying had a lot more resistance to the upside, right? And then you've made lower highs as well. But when you're looking at liquidity, it's going to give you the answer of the trend heavily. And understanding where volume's coming in, where volume's coming out, where orders are at, and everything in between, right? If I come into a stock and let's say, I'm looking at something like Amazon, pretty split Amazon. It was a little bit interesting to look at the chain, to say the least. Liquidity was scarce because what was Amazon at, like 1,300? Something crazy. It was like 1,300. I think that's like what the price, so pre-split. And, now we're at like 90, we were trading at like 150 or whatever it was. And so there's a lot more liquidity here, but you have to understand what you're doing and like where your targets are. And that's what I'm saying as well too, is we can start to see that, on the downside, lots of targets of where we can look. On the upside, very close range of 95. So even if I'm looking at just this morning, the risk to reward opportunity here, if I'm looking here, I'm like, okay, if I'm going short around 90, let's say I don't get a perfect fill. I go short at 94.2. My upside risk of going short is, right around, I always set my stops a little bit above where I see the liquidity levels, just so I don't get stopped out on any type of wick or a trap or anything along those lines. Just that's the only area that I open up my risk. But if I'm targeting the 95.2 as my stop, right, above the major liquidity level, downside, if I'm looking here, right, just even from the morning of, when this started to occur, is, our major levels, the next area with that much liquidity is all the way down here at 92. So just if I'm just basing it off to just the liquidity, at that point, I mean, my risk to reward there is almost a 3, right? I'm risking, $1 to make $3 for every dollar that I'm risking at that point. And that's not even based on options or anything along those lines, that's when you can really start to maximize your profit and risk to reward opportunity there. And you can see, easily, then you start to notice, okay, well, if I'm holding this trade, something's going on here where we're just smashing through every level. So what does this tell me now? It's telling me that not only did I take a good trade, not only did I go into a trade where I can understand that I'm risking very little to make, triple of what I'm risking, right? So then I understand that trading with this method, I'm going to have opportunity to lose, right? So when I say opportunity to lose is I can, technically speaking, based on math, if my average risk to reward in each trade is a 3R, right? Risking $1 to make $3, I can afford to basically lose around 60% of my trades and still be profitable if I'm winning, right, the 40%, right? And actually goes down even further if we're looking at that type of methodology. And then when I go on streaks, and you understand that the profits really start to stack up as well. And so when I say that, I'm always talking about it, it always comes back down into understanding your risk to reward. Because once you understand that, I believe that's the hardest part to get down, of understanding and, taking the emotions out of it. So that's why people always say, well, are you down? Are you losing? I'm like, I'm down on the trade, but hasn't hit my stops yet. I'm not really worried about it, right? Because, the past trades that have led me here. And ultimately, that's what you're seeing kind of coming down in these places as well. And I get a lot of questions about, a big topic was, Tyler, why would you short Tesla? Tyler, why would you short, names like Nvidia, right? It's because I'm watching the liquidity. I'm watching the liquidity. Now, obviously, when you come into Bookmap, you get a lot more information about where these levels are, and you get a better understanding of where you need to break in order to get more aggressive moves and more volatile moves. It's like I'm going to tell you right now, again, you start breaking below 225. Again, I'm on the team of you're probably going to test down towards, 222.5, 221. 221 is really like towards closer to the target. But if you go into something like, we're going to go really quick over here and look at NVIDIA on the chart. I think sometimes this is where, you kind of get the aha moment is when you come in here and you look real quick, and we go like something like the 15-minute, giving you a visual. Let's just get rid of all drawings. We're gonna remove all the drawings. We're actually mute all these indicators as well. And I think a lot of times too, you need to come to the point and get rid of your indicators so you can just see the chart clean. And you come into the hour, I'm just saying you have a massive daily gap all the way down. Where's your daily gap? Yeah, right about here to 210. So we already know this is massive illiquid area. We can also come in and see how often have we moved in this range. If you're just fresh, you haven't looked at Bookmap whatsoever, what's the likelihood of moving quickly in this range as well, between 225 and down to 211, even to, let's say, 221? Highly likely. When you test 225 and you get rejected, quick. You break above, quick. You get back below, look how quick the movement is. You're never chopping in this range on the hour. Very quick back and forth movement. And again, where do we know that? Where can we get confirmation on that? We come in here to Bookmap and you can see you break below 225. There's not very much liquidity down to 220. What's interesting here though about that is you come back into today's action and you're seeing all that liquidity in between this range of 230 down to 225. So this is where you start to get into where you really start to make your profits and understanding, where the value of your trade is. I always talk about each trade I have has value, right? So if I have 3 trades right now, and I do have 3 trades, I have Tesla. I think this one is probably one of my riskier names, but I have more time on the contract. NVIDIA, I think it's second highest value one that I have. And then Amazon, probably the least valuable trade that I have, but it's the least amount of risk. This trade hasn't gone red at all on me yet, and I've had it for about 7 days, and it continues to just stack and make lower levels over and over and over, and you're bouncing at that level right now. But yeah, so I categorize everything I do with risk to reward and value. And that's, interesting that you said that, but yeah, so that's always one of the key signs of a trader, in my opinion, that people always say, hey, do you watch this trader? Do you watch this person's YouTube? And I always ask, like, I don't watch a lot of YouTube when it comes to trading, just because I'm always recording or live. So it's like I don't want to be on YouTube if I'm not doing work. But my main question to most people is, well, do they talk about risk to reward? Because if they don't, then I think I'm like, I'm not super interested, right? I don't want to just talk about a play and say, oh, this could make me a whole bunch of money. The question is how much am I risking to make a whole bunch of money? You know what I mean? Am I risking 50,000 to make 20,000? Am I risking $50 to make $150? Because then you can start to see where the value is, and that's the point to where you really got to come in and start to understand. Maybe that was a little bit of a long explanation, but yeah. Mr. Braun, what are the indicators down below? Explain how to use them, please. Okay, so this is the CVD. There's a lot you can read on the CVD. Any Google search will give you a really in-depth understanding. Needless to say, though, CVD, in my opinion, tells you the way that we're moving on momentum throughout the day. It gives you a really good visual. I don't love using CVD, though. On equities, not very interested. On short-dated equities, not a huge fan. Gonna tell you that right now. But like when I'm looking at futures, I think the CVD is extremely helpful. I think it's very, very, very helpful. Like even here, you're seeing a very strong CVD trying to hold up, not in the red, not in sell positive, but it explains why you're trying to hold up right now. But I'm going to tell you right now, you break below 200 SMA, I can guarantee that CVD will turn red very quickly. And then the other one, and this is your icebergs, is what I was talking to Bruce about. Iceberg and stops, really interesting indicator also. And so this is a perfect use case of explaining it. So can I actually, I don't need to. So the red one down here, this one right here that I'm highlighting, you'll see it usually stays pretty flat, but it'll spike down or up. So this level right here, the key level we have about 39.48, 39.49. Going back to the chart, it's going to give you a better visual if we show you here real quick. So going into ES, we pull up that 200 SMA. It's the main level we've been watching. What happens here? So you can see that we start to break below this morning, below that right there. This is the key level, 39.48. And so when you break below that level, what happens? A lot of orders get stopped out of their position, right? So that's what I was just saying on Amazon. So if I'm going short on this, if I was like to enter a day trade today, right? If I was going like for short dated, if I wasn't have stops, it'd be right above like 95. So 95.2. Why would I do that? Because I don't want to get stopped out like this. So you break below your key level here, and then you can start to see all those stops start to take place, right? And that could be argued as a trap or, a stop hunt or whatever, popular words you've heard in that subject. And so you can see that a whole bunch of stops get hit. It comes back to flat, and then you kind of bounce back up there. And then the blue is the icebergs, and these are essentially hidden orders, right? And if it's spiking to the upside, it means that they're buy orders. If it's spiking to the downside, it means they're sell orders. This does not account for options, so that's very important to understand there also. But yeah, you have been seeing, even right here at lows, you get that stop point, and then you get some ICs coming in there on the iceberg, some of the hidden order book, and you start seeing buying, and then guess what happens? You start to flatline, and then you push back up and get a bounce. So definitely something that I do watch, and that's what I was telling him right there was, I'm always watching what's happening with the ICs, right? And so something interesting here, so you saw the stops, I believe, spike a little bit around 9 o'clock, just a little bit, not as influential, but you got to bounce at that level. You saw some shorting occur. Someone started shorting at the 200 SMA about right there. You got to bounce. Saw some buying also occur. But more interesting when you start to see the stops get wicked. When you start seeing stops moving more rapidly, that tells you that orders are getting filled and orders are getting out. And so that's really interesting for me. Why do you trade the upper red zone? I'm not doing a lot of day trading right now because I'm primarily set up into swings for myself. I personally believe if we get below the 200 SMA, we have a lot of room to the downside, and I think equities are overextended. I've been kind of screaming at a brick wall the past few days for this to happen. So probably could have day traded, probably should have. But again, with my swings, I'm going to make, and that's where you have to be able to identify what you're doing and where's the value proposition of what you're trading. I could, try to overtrade and do a lot of these day trades down here. I'm not as interested though, right? I'm interested if we start to break below, right? Because at that point, I think we have a lot of liquidity, illiquidity to the downside, right? Very similar to like how I was talking about Tesla. Like if Tesla gets below 225, that's where you're going to make a lot of your money, right? or Nvidia, and then Tesla, you start to get below 198 and you hold there, but we have obviously a big day ahead of us with the investor meeting. Amazon is well under 92. Good question though. Good question.
Yeah, I'll piggyback off that question. So when do you decide in what kind of environment to go from day trading to swing trading?
Okay, so really great question. So I'm giving you like a visual of ES and NQ. This is pretty big. So this has been one of the other things that I've been screaming is you're not going to make your money for me. This is for me. I know a lot of traders, people in my Discord, people that follow me religiously, they love trading the chop back and forth. They love it. That's their favorite thing to do, right? Kudos, go for it. I'm here for you. I believe in you. That's your thing, right? But for me, I started to understand when I traded this chop like this is typically when I would lose my money, right? This type of period here, this type of period here. That's where I started to understand that I was the least profitable. And you'll understand too, where you make your big money as a trader is when you start to get breakouts, right? That's where you get your big money. That's where you start to make, because you get a lot more obvious, you're moving in a clear direction, like 300 points of upside, 250 points of downside there, right? And so that's where you have to start to understand. Now, times have obviously changed as well when we go to the weekly chart. When I was using Bookmap back in 2020, 2021, I was on cloud nine. This was day traders paradise. Bookmap would highlight all the key levels. I'd be like, oh, is this the major level? I'd go into Bookmap. It would show me the heat map of where we're at, like easy money, buy back. And we just, it was amazing, right? It was just nonstop trading for me. But I had to start understanding here where we were chopping and where we were having the swing opportunity. And so what I'm always doing is trying to understand the pivot points in the market. And so like 12.4 on NQ right here at this range right here, that's where I started to switch towards the downside thesis. Now, also too, I've had a lot of questions of people saying, well, Tyler, why aren't you focused on trading SPY right now? Why aren't you trading Qs? Those are great opportunities. Awesome. Love them. I've had a lot of scalping opportunities, like specifically beginning of the month, day trade scalps. A lot of that was happening in the beginning of February, right? When I was trading the upside. But overall, my fundamental thesis is still that we have downside ahead of us for the market. And so I think this is just different for everyone. I think everyone, has a, different view of trading. Even my partner in Discord, we trade similar, but we trade differently. And so when we get the upside type of breaks, this is where I tend to focus more on scalping. As we've been pushing up, I'll focus more on day trades and scalping to the upside. And then as we get back into the swing of things to the downside, I'll position more dated contracts. And it really just comes back down into confidence of what I'm feeling there also, or the overall news. And so when I look at stocks like Nvidia and Tesla, the reason why I would rather have dated contracts and swing these is just giving you like a really quick visual. So like if I look at like Apple over the past month, you moved it from 120, we'll go from lows, 124 to highs of 157. A pretty good bounce, like 30%, nice bounce. But if I look at something like Nvidia, what's happened since, October, basically, right? Just giving you from local lows, right? From the lows of 52-week lows, you've gone from 108 to highs of 240. That's over 100%. I go into Tesla. You've gone from the beginning of this year, January, from 103 to highs of 215. Over 100%. So I like to focus on, and when I find opportunities of finding these stocks to where they are finding massive resistances, to where I find value in the market of understanding, hey, these have run up. Now that doesn't mean they have to drop. That does not mean they have to, but I'm trying to expose weakness that's out there. And then once I find that, then I dial in if I find the position I like, and then I start to use Bookmap to show me, okay, look, we're finding massive levels here. It's probably a good idea if I start to cut some of my position and maybe re-enter later. So just because of Amazon, again, I've been in this thing since around $95, $96 to the downside, coming into 92, what I'll do is I'll highlight this. I'll usually come in, make a screenshot, post it in Discord and be like, look guys, we're hitting a massive level, probably get a bounce from this point of view, just like you're doing right now. And then I'll be like, take some off, maybe get a re-entry opportunity to add back into those positions. Amazon, I've been in and out of this play a few times, but I'm still setting it up for a long-term swing because I see that massive downturn still around the corner, in my opinion, on some of these big names here also. That was a really good question because I think that can be difficult. And there's no perfect answer of saying that, there's a technical, if we do X, Y, and Z, or we get a MACD cross, an RSI breakdown, and, increase volume, then I have to change my thesis, right? It comes with just time in the market, right? Time in the market is always going to be the number one tool that's going to help you. The more time you spend watching, the more time you spend understanding fundamentals, the more time you spend reading and understanding where the Fed's head's at and what's going to happen with news, the easier it becomes to not predict, but set yourself up for winning positions. And so that's why when the Fed spoke today, Kashikari, Fed Bostic, I wasn't surprised when I hear their responses because I can understand what's happening from data. And then you start to see it just roll over into your option contracts as well. So it's like I always say, though, the charting is probably 50% of the work. The other 50% of the work is reading and doing a lot of due diligence. Hefe, have you looked at Microsoft on here yet? I'll pull it up. While we wait, we'll answer another question. But yeah. We'll wrap up a few more questions if you guys have any. I'll look at Microsoft, obviously, for you real quick. Let me pull up. I don't even need to pull up more. Microsoft's been so weak, though. You can see them trying to hold you up. You've had a few levels here. Microsoft's been probably one of the weaker names. Definitely was something that I was mentioning on YouTube a lot about shorting for a while. After you had that nice push up again, finding value with with some of these names. Why was Microsoft pushing up? Because there was an AI craze. You had ChatGPT, and rightfully so. They should have been pushing up because ChatGPT is going to increase their revenue potential crazy. They're the number one, name out there in AI right now. And you even have every other company's talking about AI now. You have Nvidia, you have Baidu, you have all these Chinese names naming it. I guarantee tonight Tesla, Elon Musk is going to be talking about AI. It's going to be his favorite thing to talk about tonight. Drinking game idea. Take a shot every time Elon Musk says the word AI. But yeah, so I think a lot of your downside has been established. And when you come into Microsoft as well, the biggest thing that I'd be watching for any type of entry opportunity, which I'm sorry, I think a lot of that has already hit, would be this 200 SMA that's hitting right there, the 252 level, 253 give or take, is watching the liquidity that happens when you hit that point. Now, I can tell you right now, though, it's highly unlikely. You already have so much, you have so many walls you had to go to even get there, but yeah, pretty disgusting. I mean, if you can break below 246.8, probably 246, but you can see there's so many levels, 245. But I think Microsoft's extremely weak underneath the 200 SMA. Very, very weak. Google, I always use with an L at the end. I don't know why. Maybe just habit. Google, 1 sec. Let me zoom out a little bit. Google's it's a much lower mover. Key level here is 92.25. Been mentioning that one for a long time now. But you're not going to... When you see this type of action of when you're below a key level and there's not even liquidity there yet, and again, you'll know it's a key level by coming into the chart and identifying it. You'll usually see as you get closer, and if sellers start to say, okay, maybe we need to start stacking it up, that's where you have to come and look at it. That 92.25 is your swing low from February 14th. And then you also had that, it's right there. I think you can come out even further and it goes way, way, way back. You can actually see it goes way back here. It's your swing high that you had right here also. And this is originally where that actually comes from, is right about here, your swing high of basically, I think that's 2020. Yeah, your 2020 high. So when you come back into that chart, that's where the level is. And I went over this on YouTube the day that happened, or the day that you got the retest right here. And there was a ton of liquidity. You have to go back and check the day to get a live feedback of it. But yeah, so the liquidity to the downside, not too impressive. I mean, 88, but this thing's gross. Google, these are, you're going to get less volume into these names. So I don't, you gotta look at these when you're closer to your targets, right? Names like Nvidia, Tesla, a lot more volume flows into these every day. Apple, right? They're going to get a lot more volume into those every single day. Even Microsoft, right? So, you got to understand volume as well. And when you're looking at Bookmap, volume is obviously the most important thing that's coming in here. Any last questions? Anyone in Discord have any last questions?
No, I put your podcast, Twitter, and YouTube links into the chat there.
Awesome. And by the way, guys, if y'all have any indicators y'all want me to cover in the next live stream, every Wednesday we'll be here. Please go into this. I'll show you in the Discord right here. This is Bookmap's Discord. Go to Stock Futures Tyler. Come in here, tag me. All you have to do is I, for once, will tell people that you can tag me, Tyler Wilson. Just tag me, and then just include whatever you want me to kind of prepare or have any questions about going, further, right? But yes, and then someone had a question if they're recorded. I believe they are right here. You can actually go back to the YouTube and see on Bookmap side of things. It will not be recorded on my channel. It will be recorded here. But yeah, that is gonna wrap it up for me, guys. Hope y'all got something out of this. Again, like I say, I want to help you guys as much as possible. Free content is the number one thing I'm focused on in 2023. But you guys have to ask questions. If you don't ask questions, I cannot give you answers. I cannot help you. You gotta help me help you, Jerry Maguire. I was wondering if you feel there's much difference between Jigsaw and Bookmap. I have no idea what Jigsaw is. Bookmap has been around for a while, to say the least. I remember using them back in the day when I was doing futures and crypto trading back, I believe, like in 2017, 18. I have no idea from who the other guy is, though. No clue. But yeah.
Yeah. So Tyler, you're away next Wednesday.
Yes.
Okay.
Yes.
Okay. Yeah, I took you off the calendar for next Wednesday, but you'll be there the following Wednesday after that.
For sure.
Okay. Excellent.
I'm gonna shut